50 points higher on the Nifty. The sensex is up about 140 points.
The Indian markets are largely flat.
43 out of 50 Nifty stocks, they are in the red currently.
We're down 170 odd points or so. We're down about 0.9%. Bit of a bounce, as Nigel pointed out, from the lows of the day. But is that enough? I think, it's a bounce.
Hello and welcome to Markets Today. I'm Ekta Batra. Here are the top stories for this evening. Dalal Street fails to hold opening gains on expiry day, ends at nearly 1 month closing lows. 43 out of 50 Nifty stocks end lower, Nifty below 19,550, while mid-caps underperform. However, for this series, the Nifty regains losses of the last series. CNBC-TV18 News Break confirmed. MCX confirms it will move to a new tech platform serviced by TCS from the 3rd of October. Shares hit a record high. Crude prices hit the highest levels in a year due to a steep fall in US crude stocks. The rupee ends flat. Vodafone Idea slumps after TRAI data shows a loss of 13.2 lakh users. TRAI chairman PD Vaghela tells CNBC-TV18 he's worried about the erosion in Vodafone Idea subscriber base and its inability to roll out 5G services. However, G1 party Airtel see a rise in subscribers in the month of July. L&T surges as brokerage firm USB puts out a positive outlook. Polycap tumbles despite brokerages expecting a strong second quarter performance from the stock. Global Health gains nearly 3% after Motilal Oswal initiates a buy rating with a target of 840. All right, well, let's tell you what we have lined up on the show for you. In Market Opinion, we have with us Manish Gunwani, who's the head of equities at Bandhan AMC. Mark Mobius, founder of Mobius Capital Partners. In Corporate Voices, we have Dhruv Shringi, CEO of Yatra Online. All right, let's get to this day's trading action first. The Dalal Street failed to hold opening gains to end at the day's low. The Nifty and the Sensex saw cuts of close to 1% to end at 1 month closing lows. The mid-cap index saw deeper cuts while banks fared marginally better than the blue chips. Prashant Nair is here with the details.
Once again, we woke up to negative global cues. Not so much from the equities side because Nasdaq and the S&P were flat, but yields were higher, dollar was higher, and oil prices pushed higher as well. So the start was expected to be subdued, but we got a positive start, which then got sold into. So in a way, the start and then what happened consequently was the reverse of what we saw yesterday. At one point, the Nifty in the last hour or so was down over 200 points, a little bit of recovery in the end, but negative. About 0.8% cut. Bank Nifty down about 0.75%. Lower. The mid-cap index was down over 1%. The small cap out of the 4 indices did the best with it lost only about 0.25% or so. Now, tech stocks, of course, under pressure with yields in the US higher. Techem, LT Mindtree, you had Wipro, Infosys, which were down. Oil sort of also took the sheen away from some of these paint companies, Asian paints and the large caps. Divi's, HDFC Life were also other losers. Some gainers coming through. L&T has been doing well recently. It continued. Power Grid and Bharti were the other stocks which were higher. Advanced decline was negative, so some broader market losers. You had IDFC First, AU Bank, Indian Bank in the financial space, Angel One, Muthoot Finance, HDFC AMC, which was under pressure. Midcap Tech, Happiest Minds, Emphasis were lower. And in the industrial space, names like Voltam, JSW Energy and Cummins came under pressure as well. Some winners in the form of MCX, Finolex Cables and Tata Investment. MCX, of course, is our story, which got confirmed. Recent listings, right? RR Kabil, Zaggle, EMS, all less than 2 weeks old in the market. And not so recent listings as well, like Dreamfolks, Mapma India doing well in today's session. It's back to watching global macros and the 3 things which have been hurting us: yields, dollar and oil. We need them lower, not higher. And that'll be the focus when we come back tomorrow morning as well.
Okay, all right, Prashant, thanks very much for that. Let's get you some expert opinion. Manish Gunwani, the head of equities at Bandhan AMC, believes that global liquidity will remain stable in the future. Here's what he said.
We are not too much into cash. We are deploying whatever money we get. We see pockets of opportunity, although obviously markets have run up. Maybe tactically there could be a correction because some of the tactical indicators are looking stretched. I think that globally liquidity will be reasonably good going forward.
Okay, well, in more opinion then, market veteran Mark Mobius believes that India is the best destination for global investors compared to other emerging markets. Listen in.
For the global investors who must have exposure to emerging markets, they're really in a bind because they've had to get out of China, or their holdings in China have been wiped out to a great extent, and they have to look where else. Russia's out of the question. They've already lost 7% in Russia. Where do they go? It's India is the only other place. So that's the reason why I believe that you're going to see more and more money coming into India, simply because people have to get exposure to emerging markets, and India is the place to be within this emerging market spectrum. It's been anywhere between 5 to 10% in that range, and we've been increasing. Of course, we've been helped by the market as well. You must remember that the market has come up, and our holdings in India have done very well, and so as a result, the weighting has increased.
Okay, all right, on to the second headline now. We told you first, and now it's official. Commodity exchange MCX will go live on its new technology platform serviced by TCS from the 3rd of October. MCX hit a record high. Sudarshan Kumar is here with more.
MCX will be going live on new technology platform from October 3. It's the platform for which MCX had signed agreement with TCS 2 years ago in September 2021. Now, earlier this year, MCX had renewed agreement with 63 Moons to use its platform till December, which was at a cost of rupees 125 crore per quarter, which was almost 100% of total sales of Q1 FY24. Now, if we look at the historical data, the cost for technology platform saw a major jump in last 1 year. In Q1 FY23, the cost was rupees 19.28 crore, which was just 17% of the sales. Now, come to Q4 FY23, it increased to 87.3 crore, which was 65% of total sales. Now, analysts assume once this technology platform of TCS is implemented fully and the platform of 63 Moons, agreement of 63 Moons expires in December, there will be a major cost saving for MCX. They assume that the cost of technology platform will come down to 10 to 12% of total sales from the current figure of 100% of total sales.
Okay, all right, Sudarshan, thanks very much for that. Remember, you heard this news first on CNBC-TV18. Let's move on. The third headline now. Oil prices have surged the highest level in over a year. This is on the back of a steep drop in U.S. crude stocks, which added to the worries of tight global supplies. Manisha Gupta is here with more details.
Well, it's a huge jump in the crude oil prices, 3% overnight. And with that, we are up 30% in this current quarter for the crude oil prices. I mean, we started this quarter with nearly $70 a barrel. We are trading at 97 right now. So it has been a huge jump, so as to say. The support clearly comes in from a few factors. One, the markets are anticipating a deficit in the fourth quarter. That is because OPEC and allies, which is Saudi Arabia and Russia, are looking to cut output and exports until the end of this year. And when you look at non-OPEC as well, the U.S. production also has continued to decline. The U.S. inventories are the lowest since early 2022. And while the fundamentals have been on the stronger side, the markets also are pushed higher because of the hedge fund buying, where their net long positions are the highest in 3 years, and we have seen a lot of money continue to move in case of crude oil prices. Most of the Wall Street banks and brokerages will tell you that $100 a barrel is a possibility in the days to come there. The fourth quarter and the first quarter of 2024 also seems to be looking at very bullish cues. While in a scenario like this, the OMCs could be surging, but because there has been no fuel price revision, it seems to be hurting their margins. So we haven't seen as much increase or favor come into them. So whether you look at petrol or diesel for that matter, when you look at the overall profitability or margins in that sense, clearly has not been helpful or exciting for them.
Okay, all right, Manisha, thanks very much for that. Moving on, can stocks keep rallying with the rise in oil prices? Surabhi Upadhyay is here with an interesting analysis on the relationship between crude prices and equities.
Well, thank you very much for that. Just a couple of weeks ago, I did this analysis, simply going back in time to see what history has done. How have these two markets moved? Crude oil on one side and Indian equities, taking the Nifty as a benchmark. This is a long-term chart, and it goes back all the way to August of 2020. 2008. That is when the global financial crisis was really spreading and it was upon us. So I've looked at data from then till pretty much now. I mean, that's the 13th of September. And the interesting facet is in this long period of time, largely speaking, there's been a positive correlation between Indian equities and crude oil. The first very clear patch of correlation or period of correlation was from March of 2009. Remember, that's when markets around the world made that bottom after the GFC and the rally started. So crude moved higher, equities moved higher, and that correlation continued till about November 2010. That's the first big patch of correlation. Let's look at the second phase. So in this chart, we'll move to the second one now. Again, this entire area was also a period of correlation, positive correlation. Crude oil prices as well as the Nifty moving higher. And then there's a third patch, which is just around here. This is the middle one that I was talking about. A long period of positive correlation, 2016 going up to October of 2018. And then the third patch of positive correlation came in just after COVID. Largely speaking, both these asset classes moved up together post-COVID. Let's pull out the third one if we can. There we go. So this is basically post-COVID. Again, it was March where the markets bottomed out, 2020 of March. And then both these markets pretty much moved together. However, there are also phases, and three very interesting ones, when this positive correlation broke down. So which are these three phases? The first, again, I'm going back in history, 2010. That's when we saw that the markets are not moving in tandem, these two markets. In 2010, this is November, going up to February of 2011, crude oil prices rallied almost 15.5%. But look at the Nifty. From a level of 6,300, we came down to 5,200. 16% decline on the equity side. But the place where the correlation completely broke down is actually in 2022. Let's pull up the long chart if we can once again. Yes, this is what we're talking about. Now, here is where things completely went haywire, and these asset classes were not moving up in tandem. Crude oil prices spiked up all the way March 22 to nearly $128 a barrel. Why? We remember this is the Ukraine conflict at its peak. The Nifty declined to about 16,000, just below 16,000. In fact, to put that in numbers once again, there were two phases to the crude rally as the Ukraine crisis was playing out. So the first phase was December of 21 till March of 22. There was an 85% rally in oil prices. The Nifty declined. The decline was not as huge as the fall or the rise in oil prices. The decline was about 7.6%. There was a second leg to the rally, up rally on crude, again because of the Ukraine war. And that was from March of 2022 going up to June of that year. There was a 25% additional rally, trading rally on oil prices. And the market again declined, the equity market, about 6.8%. Short point, largely there's been a positive correlation, but it doesn't always work. And in extraordinary circumstances, we've seen a breakdown between crude and Indian equities.
Okay, all right, Surbhi, thanks very much for that. Moving on, travel agency Yatra Online saw a weak debut on the exchanges. The stock listed at a 10% discount to its issue price. We did speak to the management, the CEO of the company, who said that the company is growing at a higher rate compared to pre-COVID levels. Listen in.
We are the largest player on the corporate travel side of things. And we've got about 800 plus large marquee corporate customers that we service. And this has been growing at a very healthy rate. If you were to look at, pre-COVID, we were growing at almost 2x of the market rate. So we expect future growth to continue to be strong. And in terms of market, we expect the market to grow at, between the 10 to 12% mark. And with us guys growing significantly faster than that. So in terms of market share, that will translate close to about a market share of about 6% in terms of customers. But if I was to look at that on a volume basis, because we are serving the top end of the market, it would translate into closer to about 9% of the overall market.
All right, time for a short break now. We'll be back on the other side with other top stories. Welcome back. Well, you're still tuned into markets today on CNBC-TV18. The fourth headline then, Vodafone Idea slumped close to 3% after TRAI data shows a loss of 13.2 lakh users. However, Jio and Bharti Airtel saw a rise in subscribers in the month of July. Reema's here with the details on this.
Thanks so much for that. So TRAI has released the subscriber data for the month of July. The key takeaway is Reliance Jio and Bharti continue to add subscribers, while the other two players in the industry, Vodafone Idea and BSNL, continue to see the subscriber base decline. Getting into the numbers, Reliance Jio has added the most, 3.9 million subscribers. Bharti has added 1.5 million subscribers, and Vodafone Idea and BSNL have lost about 1.3, 1.4 million subscribers on a month-on-month basis. But here the key to track are the active subscribers, the ones who actually use their connection in the last 30 days. Here Bharti has added more active subscribers than Reliance Jio on a month-on-month basis.
Okay, all right, Reema, thanks very much for that. Moving on, the fifth headline, L&T gained 1% on the back of positive brokerage commentary from UBS. The brokerage firm has maintained its buy rating on the stock but revised its target price. Vivek is here with the details.
Well, absolutely right. We've been highlighting about how the ordering activity for L&T, given the fact that riding crude oil prices, has actually kept GCC's ordering activity extremely robust. L&T has been the primary beneficiary within the Indian listed space from this particular phenomenon playing out. UBS too has taken note of this particular trend, and what UBS has done is, while they've maintained their buy stance, like you mentioned, they've gone ahead and increased the target price quite significantly to 3,600 rupees a share. What do they like? They believe that the company at this point of time is positioned as PLL perfectly to play this particular cyclical positioning trend that's turning in favor of L&T. Along with that, the rising shareholder focus and the growth appetite are both something that is improving. Along with that, what they're saying is that the new strategy that the company has embarked upon ensures L&T's appetite for persistent and consistent new order growth. They expect that this particular strategy should aid the company's focus in order to gain more orders from outside of the domestic market. What they believe, they expect L&T to record healthy 17%, 32% CAGR growth in the core sales as well as the EPS from FY23 to FY26. Along with that, the cyclical earnings momentum, the improvement capital allocation makes something the company the topic as far as the industrial space is concerned.
Okay, all right, Vivek, thanks very much for that. Moving on, Polycab fell over 1% despite a buy rating from Nuvama Wealth. The brokerage firm believes that exports will be a growth driver for Polycab. Surbhi Sutaria is here with more.
Thanks so much for that. So as you rightly said, Nuvama met with the management of Polycab, and there are some key takeaways from there. They have a buy rating on the stock with a target price of 6,139 rupees. Now, two key triggers going ahead for Polycab will be export growth and also the Q2 performance. So, strong global demand and capacity shortage has led to a strong exports growth. Exports currently contributes 11% to the cables and wires business of Polycab, and they expect a 40 to 50% surge in the exports, which can incrementally contribute 4 to 5% to their top line. Also, higher export margins will lead to an overall margin expansion when you compare it to their peers. Secondly, strong Q2 demand is expected, as the channel checks indicate that volume growth could be anywhere in the region of 15 to 20%, and also favorable commodity prices could lead to an EBITDA growth of 25% on a year-on-year basis. They expect EPS of Polycab to double in the next 3 fiscals and the return on equity to go up to 23% from 21% currently. So even though the stock is underperforming today, it has been a huge outperformer, over 90% in the last 6 months.
Okay, all right, Surbhi, thanks very much for that, Polycab. But KPIT Technologies gained in trade after it made a fresh investment of 5 million euros in its subsidiary in Germany. The company is bullish about the German unit's growth trajectory going forward. Reema is here with the details.
Thanks so much for that. So you would ask, right, KPIT is investing £5 million into its subsidiary. £5 million is 50 crores. Why is it such a big deal? Well, £5 million is 10% of the company's cash balance. The cash on the books as of Q1 of FY24 was 526. So 10% of the cash balance is being invested by the company into its own subsidiary. So from a company's point of view, this is a material investment. And this is a subsidiary which has been growing quite smartly for the company. Revenue growth at 34% over the last 2 years. The stock has been the rank outperformer, 70% plus in the last 1 year, and that's because the company's growth rates are very strong. The company is guided for a 27 to 30% growth in FY24. It's been growing at this clip ex of the COVID years. This is one of the few IT companies where we've seen EPS upgrades. Most IT companies have been hit by the macro slowdown. Their revenues have dwindled, but KPIT Tech is one company where EPS estimates have actually gone up in the last 12 months. And triple bounce numbers are up for you. That said, because of the kind of outperformance, the stock is also trading at expensive valuations at 40 to 45 times forward multiple. In terms of the stock move, 77% higher in the last 1 year, and it's off about 5-6% from its lifetime high levels.
Okay, Rima, thanks very much for that. So that's KPIT Technologies. But one stock which is in focus is Medanta Hospitals. Global Health, or rather Global Health, it closed around 2% higher after Motilal Oswal has initiated coverage with a buy rating and a target price of 840 odd rupees. They say that it is crafting a differentiated ecosystem in healthcare, and the clinical excellence is driving robust operating performance for the company. Nonetheless, they also believe that the average revenue per occupied bed is expected to grow further because of a payer mix as well as a case mix which will propel it. Bed additions in Lucknow, Patna, Noida will cater to the unmet demand. They expect revenue growth of 14% over FY23 to FY25 CAGR, EBITDA of around 17% and a profit of around 26%. So that's on Global Health or Medanta. But moving on, billionaire businessman, paint industry veteran and the non-executive chairman of Asian Paints, Ashwin Dani, has died at the age of 79. Among the many accolades he earned, Dani was the pioneer of computerized color matching in India and brought several paint products to the country. Dani was honoured with a Lifetime Achievement Award at CNBC-TV18's India Business Leader Awards in 2022. All right, on that note, we're going to wrap up on this edition of Markets Today. Stay tuned for more news.